Hey everybody, how is it going this Wednesday? In this video, I want to go over Exela Technologies Incorporated, ticker symbol XELA, and I want to give you my opinion on their chart. They're having a pretty decent pullback today, so I want to dig a little bit deeper into it and let you know if I think it's something to worry about from a technical perspective or if this is just a normal pullback. And then after that, I want to get into some of my trades that I made today. A couple of them are pretty interesting, so I want to show you what I was thinking. Then after that, I'm going to get into some of your questions. Now, if you're new to my channel, I have been trading and investing for over 20 years, and in each video I will show you trades that I see setting up right now. So if that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And also, if you would like to support the channel and become part of our Patreon community and see what we are buying and selling in real time for a measly $10 a month, that link is in the description. All right, let's get into this chart of Exela Technologies Incorporated, ticker symbol XELA. But before I get started, if you could do me a small favor and like the smash button for me and help me out with the YouTube algorithm, or at least that's what everybody else says. I have no idea if it actually helps me out with the YouTube algorithm, but I would greatly appreciate it either way. But please remember, I'm not a financial advisor. All of this is just my opinion. I'm just trying to show you what I am seeing in the charts. But let's get into Exela Technologies Incorporated. As we can see today, it is pulling back pretty hard. This actually looks like a pretty nasty red bar and could be a reversal candle because it failed to make a new high. Let me zoom in a little bit. And actually, the volume is a little higher than I would like. So that is telling me it could be a short-term top. You know, it's still above this 8-period exponential moving average, but it's pretty far extended, so it could definitely pull back into that. But as long as it is above that 8-period exponential moving average, the uptrend is still intact. So you're going to have pullbacks during the uptrend. There is no need to get too worried. You just want to take a look at the candles and see how nasty they look. And this is a pretty nasty looking one, and it was pretty extended away from that 8-period exponential moving average. You know, these things are like rubber bands. They get too far away and then eventually snap back into them just like it did right here. But let's take a look intraday and see how it is shaping out on the intraday time frames to see how this pullback is actually looking. And if you zoom the chart back and really take a look at this pullback, even though it looks pretty nasty on that daily chart, it actually kind of looks like a bullish wedge or a bullish triangle consolidation. Now, of course, these patterns really, you know, they're continuation patterns, but it all depends on how they're resolved. Just because you see one of these shaping up doesn't necessarily mean it's going to continue in that trend. I mean, the odds favor it probably is, but the more extended you get, the more of a possibility where you can finally get that trend reversal. So what you want to watch in these type of continuation patterns is see how they resolve themselves. If they resolve themselves like this and start heading up, then the odds favor it's probably going to continue up. Now, if it breaks down pretty sharp below this lower trend line, I was going to put some arrows on that, but it takes a little bit of time to turn them around. They're always facing up. See, I got to kind of do like this. It'd take too long. But anyway, if it breaks down through this trend line in a sharp manner, chances are the uptrend is over for the time being. And if you get a bounce up into this trend line is usually when you get another rollover. So usually when I'm in a stock that is making a pattern like this, has a sharp breakdown, I usually wait for it to bounce back up into this area to get back as much money as I can, and then I usually, you know, just get out of the trade. And, you know, if this thing does end up continuing going higher, usually it'll pull back into this area. If it does go higher, I mean, most often it does not once it breaks down like that, but in the occurrence in which it does, it'll usually hang out in this consolidation again, and then it'll eventually break back up. And you of course can just re-enter the trade right there if you want to. But I mean, I think that if you look on the intraday level, that this actually is a pretty you know, decent looking continuation pattern. So I am sitting tight with the rest of my shares, but I am a little bit worried because if you do go back to that daily chart, it is a pretty nasty look. Actually, let me get this stuff out of here and go back. If you do go back to that daily chart, it is a pretty nasty looking candle. And actually, if you go to the weekly chart, we can see that this uptrend still looks pretty healthy. It is extended, but it still looks pretty healthy. So as far as I'm concerned, I'm sitting tight with Excelia Technologies with the rest of my position, and I might end up adding if it gets back down to this 8-period exponential moving average. Tomorrow this is going to be a little bit higher. It'll probably going to be right around 365 or so, I would guess. There's still some time left in this trading day, so you don't know where today is going to end up, and of course that's calculated into it. But I just want to do that update on Excelia Technologies. I know a lot of you guys are holding this stock, and I do get a lot of comments on this one, so I just wanted to update my opinion and show you what I am seeing. All right, the first one that I want to get into right now is MediaCo Holdings Incorporated, ticker symbol MDIA. I actually traded this one today. Well, actually, I am still in this, but I was looking for a day trade bounce off of this 8-period exponential moving average. And I bought this stock at $7.25, and I've been smoking a pork butt shoulder roast, whatever you call it. I've been smoking that all day long, so I left for like 15 minutes to tend to it. And this thing just took off without me and then crashed just as fast. So I am still in this one. Hopefully it can have another move up before the trading day closes, because I don't really like holding these more than a day. This is just a quick day trade to scalp a few $100 or so. But let me go intraday and show you what happened. I got in at 7.25, right about here. So it went up just a tiny bit, pulled back below my cost, and just kind of went sideways. These are minute candles, by the way. So it just went sideways, just boring me to death. I stepped away to tend to that thing, and I knew I should have put in a sell order. And the thing just screamed up, and I am still in this thing because I was recording something else and it just had another move up. So I'm still up a couple $100, but it would have been nice to make about, probably would have made $600 or $700 if I would have got out up here. So hopefully we get another move up. I usually don't like to hold these for more than one day. Sometimes you get multiple day runs, but more often than not, you don't, especially when a stock is coming down this fast. So I might end up just closing this out for a small gain, but I just wanted to show you one of those trades because I usually get pretty decent bounces when, let me go back to the daily. When you get these huge moves up and then you get a fast move down, usually that first touch on that 8-period exponential moving average, you can play that on a day trade, and scalp a quick, 5-10% pretty consistently. And, you could put your stop, say, right down here in case it does go blasting through it, take your small loss. But more often than not, you'll be surprised how often it bounces off that 8-period exponential moving average. If you're not, if you don't have that 8-period exponential moving average on your charts, man, definitely put that on there because it works pretty darn good. But let's get into the next trade that I made. I actually bought some call options on Virgin Galactic when it came down to this 50-period simple moving average. This thing is way oversold and due for a bounce up. Hopefully we get it. I bought the $33 calls that expire on Friday, so I need a quick bounce up. I think I am up just a tiny bit the last time that I looked. But these ones I probably am going to hold overnight just in case we do get a nice bounce up. I just bought a few call options, so my downside is limited, but if we get a big bounce up tomorrow, they should pay off quite well. More often than not, when stocks come down to this 50-period simple moving average, you usually get a decent bounce, especially when they've had multiple down days into it, especially big ones. That's usually when the rubber band gets stretched a little bit too far, and you got a pretty good chance of getting a nice bounce up. So plays like that. I usually like to play it with call options, rather than jump in with shares, because you can just buy a few call options and you limit your risk. And if you do get a big bounce, it turns out to be a pretty decent gain. But the next one I want to show you is AutoWeb. I talked about this one a couple of videos in a row, I do believe. Let me get this out of here real quick. Actually, I'll go in intraday and make those just so you can see what I was doing. But this one's making a very nice rounded bottom, broke through resistance, and even though it's pulling back today, it is still holding it pretty nicely. So I'm keeping this one on my watch list. And actually, let's go intraday right now. And we can see it's making a pretty nice triangle consolidation. So this is usually a bullish pattern. You got to wait till it resolves itself. If it resolves itself to the upside, we could be headed up again to make a new high, or at least a new relative high just in the short term. and that's exactly what we want. So AutoWeb, don't own any of it yet, but I'm still keeping this on my watch list because it's still a bullish pattern. I'm going to try to be a little bit more careful with these lower price stocks, and I'll go into that in a minute. But next one I want to show you is actually VTGN, and I bought this one a couple of days ago. And so let me go back to the daily chart, back it out a little bit. And this one is one that did not work. So I haven't gotten out of this trade just yet. I was going to put my stop loss under that 50-period simple moving average and give it a little bit more room to roam. But I think I am going to end up taking my loss on this one. But I just wanted to show you one that did not work out. And actually that day when I bought VTGN, I was going to buy, it was between VTGN and PFMT, and of course PFMT was the one that exploded higher. It is pulling back right now because a lot of these lower price stocks are pulling back, but you know, this one kind of took off without me. I can't buy every single one, so sometimes you pick the right ones, sometimes you don't, and it's not a big deal because the next day there's probably going to be some other opportunities as well, so I don't beat myself up over it anymore, even though it does kind of suck a little bit still when you pick one and it goes down and the other one goes up. But hey, it is what it is. But this is what I want to show you guys. The IWM looks like it's rolling over again, and I usually don't like to buy too many lower price stocks when the IWM is rolling over. This is the one that I look at before I start buying lower price stocks that are you know, that I want to hold for a little while, because usually when the IWM is rolling over, a lot of those stocks end up rolling over too. Just because the Qs are going up or the diamonds or the spider is going up doesn't necessarily mean those lower price stocks are going to follow them up. So you want to keep an eye on the IWM to make sure that you're not buying into those stocks when they're actually getting weak. And this one is kind of concerning me a little bit. I mean, it looks like it is on the brink of rolling over. Of course, you know, I thought it was probably going to roll over here, and it didn't. And I thought it was going to roll over here again, and it didn't. But, man, it is getting weak again. But if you look at the Qs don't look too bad. They still look strong. Go over to the diamonds, which, of course, is the Dow Jones Industrial Average ETF. Still looks pretty good. And if you go to the spider, which is the S&P 500, still looks pretty good as well. But if a lot of you guys are holding these lower price stocks that are going down today, that's why. It's because the IWM is weak. You know, the lower price stocks are getting weaker. But just wanted to show you that real quick. And now I want to get into the question. The question was from Lazare. I think that's how you pronounce it. But the question was on LKCO. And you can see all of the lines I have drawn on this chart. I've been watching this one for quite a while. I was watching it back here, and this one is kind of painful to look at because before it went on that huge run right there, I was watching it when it was breaking out of this channel. It had a little bit of a bullish, you know, rounded bottom triangle formation that it broke out of. It came back down to that 50-period simple moving average, and I was going to pick up some, and I was like, you know what? The chances of this thing jumping back up into this channel was probably pretty slim, and I was definitely wrong because it didn't just go into that channel, it blasted through it. And then it came all the way back down again and started making another bullish triangle consolidation. And I was going to buy it on this day, but I decided not to, and of course had another big move up. So I missed out on this not once but twice, so it's kind of painful to look at. But if we go to present day, it looks like it is breaking down through that 50-period simple moving average. It's been going down for quite a while, so it's definitely due for a bounce. But like I said before, the fact that the IWM is rolling over, I don't like to buy too many lower price stocks when that is rolling over. I like to just day trade them. So when the IWM gets weak, I pretty much just day trade these lower price stocks because it usually leads to some more weakness. Until that IWM firms up, that is usually when I do start buying these stocks to hold for several days. But if they don't, then I just try to day trade them. But I could say that this one is certainly due for a pullback, and the fact that it's breaking through that 50-period simple moving average kind of worries me. But quite often these things can break through these major moving averages, and as long as they get right back above them the next day, that can still be that reversal signal. So just because it breaks down below it, I usually don't take it off my watch list. I usually watch it for at least 1 or 2 more days, because if it can jump right back above it and have a sharp reversal, that could be the start of the next swing move up. But Hopefully that answered your question. If it didn't, just leave me another comment and I'll try to be more specific next time. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.